Good afternoon, everyone. David Paul speaking. It's after the close, 20 past 6 on the 26th of June, Tuesday the 26th of June. For the last week plus, the short-term trend on VectorVest has been down, and the advice has been not to buy any stocks at this time. I don't think that's going to change today. After yesterday's very strong day down, there is, however, something very interesting that came up on the stock viewer this morning, and I'm looking at this Irish hotel group, Dalata Hotel, with a great deal of interest. It's trading at £6.17p. We believe it's worth £7.78, up strongly yesterday, nearly 4%. I see it's off a tad today. What is of real interest is this relative value number, which is a measure of the price appreciation potential in relation to the risk-free rate over a window of 3 years into the future. And at 1.618, this is a really good number. At 1.32, this is saying that the safety and the predictability of the earnings stream over the last few years has been excellent, and it would be one of our worry-free shares. The trend is going up, and it's on a buy recommendation with the stop loss at £5.58, and we believe it's going to grow earnings next year at 40%, which is quite something. The chart, I've got the chart loaded, and I want to load a little bit more data here, and we can see that the share price has been trending upwards, and recently quite a strong and nice trend as defined by this little trend line here. In the middle of 2017, it clearly did an awful lot better than we expected, and VectorVest revalued the share as the earnings came in. And as you can see at the moment, we believe that the share is undervalued with a valuation, as we said a moment ago, of £7.78. It had a very strong week up last week, and it gapped up yesterday. It's off a tad today, but that gap out of a consolidation is a very strong feature. I would expect the share to actually move up strongly if and when the general market turns back up the page again. However, there is a caveat, ladies and gentlemen, in that the spread on the share is wide. It's an illiquid counter. They've got big plans. They're opening up 2 new hotels in the UK. Most of their assets at the moment are in Ireland, the Clayton hotels in Ireland. So I would expect this share to do very well over the next 2 to 3 years, but just remember that lack of liquidity can make it very difficult to actually get out if you have to get out. I think you should keep your eye on it. Thanks very much. Bye-bye.